Welcome to an update for Federal Milk Marketing Order 33. This is Dr. Lawrence Jones with FARME Institute, and I'm recording this on April 26th. And I'd really like to thank Nobis Agri Science for all their support in pulling together this podcast. All right, so I think the industry is just really on a teeter-totter that can go either way right now with bird flu, or as StoneX likes to call it, moo flu. The reason is right now the market is trading what I call a supply shortage because they're thinking that the virus is far more widespread and impacting production. But the problem with that is it's been found in like over 30% of the pasteurized milk for fragments of the virus. And so we're having all these popular press things. This was the New York Times that says, hey, we may be, our last chance to inhibit bird flu in humans, and we're blowing it. And of course, they had a Holstein cow on that article. So this could result in significant demand destruction. So which way this goes is anybody's guess at this point. As a consequence, we're going to have a lot of variability. And so this is the May contract for the last week. We were clear up here, clear down here, clear up here, and today we're clear down here again. And so it's been going back and forth. And where do I see this coming in? Around 1750, I think, when we're all done. And we look at that May contract, it was way down here in the 1570s, somewhere in there. And then when the bird flu hit, it jumped clear up into here. And I think it's going to settle back here somewhere. But the point that I keep making to everybody is, we probably pretty consistently could have sold this at 18. Now, where we are in 1825, you'd be really kind of saying, whoa, that's not so good. But let's say you lost 25 cents, but you probably paid 30 cents for DRP that protected it down here somewhere. And I'll get into that more in future podcasts about how to protect it with and without margins. The reason I say around 1750 is the spot market is very good at estimating the National Dairy Sales Report. And so this is the last year and a half of the National Dairy Sales Report in orange, and then the spot market in blue. And all we do is kind of look at them, but there are some significant differences. The one you always want to be looking out for is when there is panic buying. What that means is you've got predictions way up here, but the actual comes in lower than that. And how does that happen? Well, let's say that you got spot market at $1.77 and somebody's coming in just trying to buy some, but out in the country, between companies, it's actually being sold at $1.72. And that's what's going to dominate the National Dairy Product Sales Report, is actually the 25 to 30 million pounds of cheese that's actually sold from the big companies, not actually what's on the spot market. However, they're highly correlated. So let's look in the rearview mirror for just a few minutes. We've got statistical uniform price at 1864. That came up about 68 cents. And again, compared to history, prior to 2022, these are actually pretty good numbers. Let's remind ourselves what your milk check is made up of. And mainly, it's going to be pounds of fat, pounds of protein, pounds of other solids with the PPD. And then we're going to add a few things like quality and volume depending upon your co-op. And then we're going to take a few things away, hauling, CWT, marketing, all those sorts of things. And that's going to give you your milk check. But we're also going to have some depooling adjustments that are going to come directly from your handler. And the reason for that is you're highly depooling class 4. Right about 2 million pounds in the market when we've been as high as 11.8. It's not that milk's not being produced, it's just not going into the pool. And why would they be depooling that? Well, class 4 is very high at $20.09. Class 3 is only $16.34, so you're better off, if your federal order allows you, which 33 does, pull that out of the pool. And the consequence is you're going to have a lower milk check. But you should be getting that depooling check from your handler. Class 3 has been increasing at about 22.7 million pounds a day. We've been as high, I would call it 24 is kind of the max. Yes, we've been up to 24.8. But that's the new cheese plant that's taking that milk. Now, there was some very interesting data in the federal milk marketing order, because when I looked at this month over month, this would have suggested that you were up 12%. But when we actually looked at the USDA numbers, you were flat in production. So how can that be? Well, first off, federal milk marketing data is plant level data. So for example, you take the Walmart plant here in Fort Wayne, if they're actually going to pull milk from Wisconsin, that adds to the federal milk marketing data. But when they survey farms, that doesn't come into the USDA data. So this shows that you were probably bringing in significant milk into your federal order from Minnesota, Wisconsin, which makes sense because they were actually down. The other piece of your milk check is components. Your 422 fat up from a year ago at 411. Very strong components. Just to imagine the entire country is pushing almost 4% is just crazy. Protein's not coming up quite as much, and that's basically due to price. We're 328 last year, 326. That's going to come up a little bit just through genetics and some better feeding kind of scenarios. It's definitely an upward channel. We're getting ready to close April. You should be seeing the class and component numbers next week, and then you'll have your milk checks about a week after that. And so it has been falling off from this 1850 down to 15 something. I've got it estimated at 1543. The trade's at 1556, coming down today a little bit. Class 4, I've got it at 2011. The trade's at 2017, very similar. So what this means is your butterfat price should be right around $3.31. Protein is going to be way under $1, about 83 cents. And other solids, just about a quarter, a little under 24 cents or so. When you put all this together, my best guess right now is your milk checks in April will be about 40 cents lower than they were in March. All right, let's look at some of the bigger data at this point. The slaughter data for April 13th is 55,000. We're coming down again, very seasonal, coming down this time of year. But if we look at it year over year, we're about 5,000 short from last year. But what that means on a 24-month basis, we're almost 3,000 cows short, which it puts us a total of 144,000 cows fewer culled in the last year than previously. But at the same time, USDA has us coming down on about 80,000 cows off of 9.4 to 9.33. Very confusing data. But if we put it on a rolling cull rate, historically above about 32% cull rate, we're contracting because we're culling more animals. And anytime we're below that, we tend to be in expansion mode. We should have been in expansion mode for quite a while. So what does that mean? That we just have no heifers? Could be, and so we have to keep an eye on that. The other thing is global dairy trade. That kind of gives us an idea of international market. The last one was pretty well flat, session over session, but cheddar cheese was down 8.5%. And overall, brought our prices down, if we were on the world market, about 87 cents a hundredweight. So let's look at exports. These are the spot prices as of yesterday. Butter at $2.97. Nope, we're not going to be exporting that. Cheddar at $1.74. Everybody's getting all excited that export numbers are way up. But if we're at $1.74 and the world market's $1.80, I don't see that happening. And it usually takes well over 10 cents to get non-fat dry milk offshore, and we're right at 10 cents. So we might be getting some off. The cold storage report was very interesting. It looks like cheese stocks are absolutely flat for the last 4 years. And to me, this is a mature industry that basically says, that's how much cheese we're going to put into cold storage and no more. If we have a supply issues, then cheese prices should be really going up. If we have a demand issue, then cheese prices are probably down. But that ties in with the daily production. That's not per cow. This is for the industry. This has also been very flat, so it's tied together. And the thing that I like to look at the most, and this is February because we don't have the March data yet, is what's happening to disappearance. Again, extremely flat on disappearance. So we've got cold storage flat, we've got disappearance flat, we've got production flat. So part of the question comes down to what is driving a flat disappearance. And so there are two thoughts that are prevailing. The first one is just inflation. There's no money to buy cheese. The second one is this theory about Ozempic. And if you haven't seen Ozempic, it's the drug that actually helps people lose weight and stops different addictions. And what I'm hearing is there are several million people on Ozempic, and they are just stopped eating a lot of things like cheese. Just for completion, let's do butter stocks. These are just continuing to be seasonal. And coming up a little, there was a narrative that we're going to have $4 butter, but look at these cream multiples. As long as those cream multiples are in, 1.26, 1.25, there's plenty of cream around. This is the data as of today, and the spot milk prices in the upper Midwest were 5 under. So there is not a lot of evidence that milk is short, even though that's the narrative we're hearing. One of the things I want to discuss with you is kind of figuring out where you think milk prices are going to be headed. I tried getting to this in the meeting up in Thumb of Michigan, but I didn't quite get it done. So this is what's called the class calculator. As we all know that class 3 and 4 are all derived from the components of cheese, whey, butter, and non-fat dry milk. And so one of the things I always want to have you challenged with is to say if you think milk prices are going way up, figuring out why. Now, just to give you a quick orientation, a lot of this data over here on the right is updated daily, which is going to be hard to do with you. But right now, this data is as of 4/25. What's happening over here is these lines are red whenever their price is higher than the one that we predict, which means they have the possibility of falling. So let's look at things just real quickly here. So I got in here $1.82 cheese, 39.5 cent whey, $2.80 butter, and $1.15, which gives us 17.88 and a 19.59 class 4. And then you can go down through here and decide what your percentages are and what your base price would be and whatnot. But right now the question is, can we get to $30 class 3? And so that's what some people have been arguing because of the shortages. So let's put in, $2 cheese. Well, that didn't get us to $20, so we need to put in $3 cheese. So still we're at $29.25. We're going to have to take whey up to 45 cents. We're still not quite there. Let's take whey to 50 cents. We're still not quite there. Let's take butter to $3. So that's the kind of scenario where you've got $30 class 3 and $20 class 4. And that's what some people are arguing, that class 3 is going to surpass class 4. But let's come back to reality. Let's say that cheese is $1.60. Whey just can't seem to get over that 37 cents. And I think butter is going to be $2.75, and non-fat dry milk about $1.12 because it's suffering. So now all of a sudden we're talking $15.59 class 3. So if we've got these class numbers out here, we've got premiums built in here at almost $3, and so we'd want to look seriously at protecting those numbers. So I'll include that with the podcast here, and you can play with that to see what you think is going to happen to milk prices. So we'll finish up here with corn. It's been headed up just a little bit. I drew a new channel with support around $155 a ton and resistance around $185. So this has come up a little bit harder on bean meal. It has resistance more like 420. And support down here about 330. So it's fallen off significantly. So what this all means is when we look at 8 pounds of cornmeal, 8 pounds of soybean meal, if you can get in this channel here of $2 plus or minus 10 cents, that is a whole lot better to be feeding cows than where we were clear up here at 280. So overall, the price of corn and soybean meal is significantly down over the last year. All right, that was a different format, and let me know if there's anything you agree with or disagree with, and I appreciate all your support, and I'll just try to add a little bit each month on what I'm looking at on protecting milk prices.